Hello, everyone. So today we're going to talk about whether bonds are a good investment options, especially for retirement accounts like 401k, 403b, or 457 plans. Now, interestingly, bond has been around as an investment option from hundreds of years, and the emphasis on the bond has actually come back, especially in the interest rate environment that we are in today, where the rate of interest is much higher than what we see in last, call it after the financial crisis in 2000, 2008, where the Federal Reserve actually reduced the rate quite a bit. But again, currently the bond, for example, in certificate of deposit, you can earn 4% or above that. And so a bond is also kind of offering you anywhere above that rate in the market. So let's understand, what bonds are and get to see, if it's a good investment choice. So bonds are, in simple words, are debt obligations, which means that whosoever is issuing that bond, called the issuer, they promise you two things. They promise you to return the principal and also the interest piece of it. So that's basically the two elements of bonds are. Now, they are issued both by domestic and foreign entities, and it can be issued by a government or a company or a corporation. And if you compare with the equities, or I would say more like equity funds, very similar, in terms of how the bonds are. They can be a domestic bond or they can be, a foreign bond. A foreign bond can be, let's say, issued by French government, for example, or UK government, or a company which is with a domicile in UK or France. They may issue bond, and there's an opportunity to invest because of the rate of interest they may be offering and the risk profile of that particular bond. So some of the other interesting differentiator of bonds which are different from equity fund, is a time horizon, or what we call as a duration. So that's another interesting aspect of bonds, and we'll get to that rather quickly. Now, if you think from the bond or the debt that we're talking about here, it can vary from 1 day to 30 days or 30 years. And there are distinct ways that we can look into it. So when you hear a term called long-term bonds, these are 10 or more years in duration, and medium-term are 3 to 10 years. And when you think about short-term, it can be 1 day to 3 years. So when you look at your 401k plan in any employer, usually they will call them as long-term bond or medium-term, and sometimes it's called short-term. So that kind of helps you, in getting your head around that, okay, it's a duration that they're talking about, and that's one of the differentiator in terms of the bonds. Now, which term or which horizon or duration you want to pick is all dependent on, what's your investment horizon. If you are, call it the millennials or even Gen X, then you have more time, and therefore you may be looking for something which is longer term. At the same time, you also have to consider, if there's a need for any liquid investments, and that's where the money market funds comes into play, which is again short duration, and the securities which are part of the money market funds are usually under 13 months. Some of the things that you may have heard in the news is like the treasury securities, and those are very common as an investment choice. Now, this is just a quick picture view of, the bonds, like short-term 1 to 3 years, medium-term 3 to 10, and long-term 10 to 30 years. Now, let's talk about the second differentiator, in terms of who's issuing it, as I was telling you before. So it's a huge market, and it's actually bigger than equity markets throughout the world. The three main issuers of bonds in the U.S. are U.S. Treasury, U.S. municipalities, and corporate, or the businesses, the companies that we know. And of course, besides there are other bonds which are backed by mortgage. You may have heard of asset-backed securities. They can be backed by mortgage, they can be backed by car loans, or the other kind of assets. And commonly, since they're backed by something they call asset-backed securities. The mortgage-backed securities, again, we went through the financial crisis because of the crash that happened in this particular kind of security. So not going into that particular aspect, but just to kind of keep it high level, the asset-backed securities are nothing but, which are backed by these mortgage or, some kind of a loan behind it. And as we were talking before, Treasury is the biggest player in the US bond market. They comprise 35% or 14 trillion of the total bond market. And this page kind of give you a quick view of that. So if we look at this pie chart 14 and the next one, you look at these are asset-backed securities, then there are corporates, and then after that there are others which kind of comprise of the US bond market. Now, if you think from a US bond, US government's issues securities, again, kind of bringing back the point that they don't issue one type; they can have different durations. So it's about who's the issuer and what's the duration. So those are the two things you have to keep in mind. Now let's talk a little bit about municipal bonds. Again, as the name suggests, it's offered by the various municipalities in the US. It can be a state, a city, a town. And usually when they issue bonds, they are issuing this because they want to get money for building infrastructure, roads, building a new school. But keep in mind, all the municipalities, all these entities are not alike. Because what you need to understand is what is the default risk? Are they going to pay back your principal and interest or not? And that's what you need to analyze. And the easiest way to think about that is think about the credit rating, and I'm going to come back to that credit rating in a minute. So one of the key aspects of municipal bonds are there may be some tax incentive attached to it. Usually no federal taxes are payable on interest from municipal bonds. In certain cases, issuing state also exempt residents from paying state taxes. So some of those tax benefits are the reason why people get excited about municipal bonds. But then you have to keep in mind the credit rating, which I'm going to talk about now. The third differentiator when we have been thinking about bond is credit quality. So in simple words, think about your credit score, so that's the best way to think about credit quality. In the market, there are professional companies like Moody's, S&P, and Fitch, which rate these bond issuance, and that makes it easier for as an average investor, which bonds to pick from. They assign ratings issued by US treasuries, corporate municipalities, and give them a letter grade. So sometimes the letter grade, as you could see, as what I'm sharing, is that they have a hierarchy. So it's like AAA, AA plus, AA, AA minus, BBB minus, BB, C, and so on and so forth. There's a nice chart also below, and as you could see, the levels, AAA is I consider prime, AA plus to AA minus, I consider high grade, and A plus to A minus or upper medium grade, and then BBB plus to BBB minuses are the so-called the lower medium grade. And together, all these categories to about BBB minus, and we are following the S&P ratings right now. That's called an investment grade. In simple words, they are better in credit quality than the others, which are rated lower. Now, interestingly, the S&P, Moody's, and Fitch, they have some differences in terms of how they call it. But if you look at the nomenclature used by S&P AAA, same as Fitch, and Moody's is slightly different. It's calling AAA. Then AA plus is used as A1, AA is used as AA2. There's slight differences, but the idea here is that they're classifying different debt securities, based on their risk profile. Now, one of the interesting one, which is very, very, very important in today's environment where the inflation has been on the rise in 2022 and 2023, and as you know, Fed is raising the rate of interest to kind of control the inflation, and therefore there is a security called the inflation-linked bond, commonly known as TIPS, issued by the treasuries. So the underlying purpose is to keep the purchasing power of money intact. Now, these securities get more attention, especially in an inflationary environment, because they're making sure that whatever the inflation rate in the market, they're able to cover you for that, and then your money value is intact. So think about this very simply. If your grandfather could buy more goods and services with $1,000 50 years ago than what you can buy today with the same $1,000. So that's basically what they're helping you to control or to bridge the gap. So one other thing that you have to keep in mind is that banks do offer certificate of deposits, and this I'm not talking about retirement accounts. I'm talking in general. But usually they don't pay high rate of interest. Now nowadays, the banks are kind of trying to offer you better rate depending on which bank you go to. You can get like 4% and plus, but you also have some banks which are still offering like few basis points, like 0.10%, less than 1% in a lot of cases. So you have to kind of research and just make sure that your money is not lying idle in the bank account. So these are the certificate of deposits, what I has to say. But, coming back to the inflation-linked securities, or the TIPS, as it's been called, it's an interesting one. And if you find that in your 401k plan, it doesn't hurt to allocate some portions of your assets to that particular asset class. Now, again, TIPS duration is also 5, 10, and 30 years. In the list of funds, you will find bond funds offering various time horizons, issue, geographies, or quality. It's a good idea, as we said, TIPS to also be included in a diversified plan. So that's what we talked about today. We are part of Plootus, and we offer this financial advice for free. One of the things that you have to consider if you're comparing us with somebody else, they charge anywhere from 25 basis points to 2% of your total asset. We're not charging anything for you right now. And you can download our app, which is AI based, and we help you plan for your retirement by making the right selections of the investments from your 401k plan. So we're going to talk a lot more about this, a very exciting topic, and we look forward to your feedback as well. You will see us on YouTube and other Instagram and other channels, and we look forward to your feedback. We're going to talk about equities. We're going to talk about Bitcoin. There's a lot more to come. So for tonight, have a great day. Take care.